So a hybrid agent is a new kind of industry professional that's licensed as a real estate agent, but also licensed as a mortgage loan originator to be able to provide a one-stop shop service by using technology and digital online solutions to be able to provide a more simpler and transparent experience for clients. Well, there's a few reasons. Number one, providing a better service to their clients. With digital, transparent online solutions, especially when it comes to mortgages, a lot of the legwork is done through technology. Now, I know a lot of companies still operate based on the old school manual paper-based process, but with technology being where it is today, over 90% of the overall process of completing an application, getting pre-approved for a loan, and submitting it to a processor, an underwriter, is digital. And a lot of mortgage companies are not sharing that information, but it's a very small percentage of the companies that are even applying that type of strategy and technology into their workflow. What we're doing is going a step further and introducing it for a one-stop shop service for the agents to be able to offer their clients. Because if most of it is going to be digital and some of it is going to be based on the human element, we feel like the agent is the one dedicating all the time, energy to servicing this client. By providing a digital, again, transparent online solution, clients can now see exactly what they qualify for without the human element of a sales position. And on top of that, the high margins and commission-based structure that a lot of loan officers get paid based on the outdated model. So it's really providing a better service, a fully transparent service, but also controlling the overall client experience. A lot of times when a file is passed off to a mortgage company, a lot of companies do a good job, but there's a lot of companies that do a bad job. And that lack of control and a lack of communication, understanding of the experience that a client goes through really affects a lot of agents from becoming successful. That's number one. Number two is really the ability to be able to make more as a real estate agent as well too. Being licensed to be able to provide this one-stop shop service, you're capable of also making commission on the mortgage. And it's not just on purchase transactions, it's also on refinance transactions. Clients that you've helped in the past or have worked with on other transactions before are capable of refinancing by using your services. The best part about this is that it doesn't take that much time to be able to increase your overall revenue. So for example, if it takes an average of 30 to 40 hours to work with one client, it takes an average of 1 hour on the mortgage side to be able to offer that type of digital solution to be able to double your income. So it is a win-win for not only the client, but being able to get, again, an online digital pre-approval instantly, but most importantly, get a better interest rate because the higher margin model is eliminated. So another reason a lot of agents are deciding to become hybrids is that their current relationships with loan officers isn't working the way that it used to work. And there's a lot of reasons for that. One of the reasons is consumer behavior is changing. Clients are smarter and smarter, and they're shopping more and more online, which is amazing. And there's more online digital consumer lenders providing that type of service where they could show instant interest rates for clients to be able to see. The reason I'm bringing this up is that the current model that a lot of mortgage companies are applying isn't working because the commission that they're getting compensated is really a high margin model, which is a high interest rate model. You have to remember loan officers are also commission-based employees that have to not only work with a real estate agent, invest into a co-marketing relationship with that agent, work on the transaction, and hopefully make some type of compensation on that transaction. So that margin that's being built in is really affecting the overall ability to be successful because the interest rate is so much higher. Now, with the hybrid agent model, that bigger margin compensation is cut by half because we're eliminating the need for the originator in the position and we're compensating the real estate agent that's literally doing 100% of the work on most of these transactions, that if they're capable of really capitalizing on an additional 1% of the loan amount, it's really helping the agent to provide a better service, but most importantly, to also make more money on their end and really apply that money to their own marketing strategy versus being dependent upon a loan officer to invest into some type of co-marketing arrangement, which I get it, it works. It's been a normal part of our industry for a long time, but the biggest complaints I get from agent is that feeling of having to refer that particular loan officer or that particular company just because they're investing and paying for the relationship. So a lot of agents don't like it. A lot of agents would prefer to be able to control the transaction themselves, especially when it's only an additional 5% extra of work that they would have to put in. So when you look at the big picture of the amount of money you're capable of making based on the amount of time you're dedicating to the amount that goes into the transaction, for an extra 5% to be able to double your commission, a lot of agents are seeing the benefit to that as well too, because they're using that money and applying it towards even credits towards clients and even offering better competitive interest rates or a better service because now they have a bigger team that they could invest in. Oh, this is a good one. A lot of hybrid agents are reaching out to their database of clients that they've helped in the past. So not only are they capable of helping their new clients when it comes to purchasing a home, but they're also contacting their past clients and letting them know that now they also offer an online digital mortgage solution for them to be able to refinance, to be able to consolidate debt, cash out, do home improvements, or do a straight rate and term program where they could from a 30-year go down to a 15-year, or change the interest rate and really just save on a month-to-month basis. The beauty of this is that business is consistent business, that if you do a really good job with your database and you do follow up with your clients, that those clients will continue to use you in the future. And when it comes to homeowners, a typical homeowner refinances every 5 years. And it's just additional business, not only on the income that they're capable of capitalizing on the current service for the purchases, but also the income on past clients that are going to be coming in and also referrals. Well, a lot of mortgage companies are built based on a model that's been successful for them for the past 3 decades. They focus on recruiting mortgage loan originators to go after real estate agents that go after clients. And that business model has been extremely successful for them because mortgage companies don't have to pay any type of salary for these loan officers that have to go out there, invest their time, energy, and money to be able to build these reciprocal partnerships that hopefully will refer business to them to bring to the mortgage companies. Now, these mortgage companies are dependent on these loan officers. So if they go around their loan officers to say, hey, we're going to go straight to the agent and get you out of here, that we don't need you anymore, they'll end up losing 90 to 100% of their staff. On our end, we have a different approach. We love our loan officers, but we see them playing a different position for the future of this industry. And it's a different management position when it comes to working with hybrid agents that they're going to be able to service and help grow versus being the normal loan officer that works with the clients that come from real estate agents. So most mortgage companies won't apply it. Most loan officers won't talk about it. And most real estate companies won't apply it either because they're not licensed to be able to capitalize on it on their end. So for example, if you work for a brokerage that is a real estate company and they're not a mortgage company, why would a real estate company want you to be licensed as a loan officer where you're going to be able to dedicate more time to that particular position where it's going to take away from the current investment you're putting in based on the time on the real estate side? Plus, they don't capitalize on it. And some of it look at it as a higher risk factor on their end that you are providing both services, which of course there's a lot to say, and they're right in a lot of different ways because most mortgage companies aren't capable based on the technology to be able to provide the transparency that's needed for this to be truly fully compliant and that protects the client to be able to offer them a better service. Absolutely. Based on the technology and the way that we've set up our front-end origination process for clients to be able to see everything that they qualify for, it is by far the most compliant way to truly service a client. And that's the best part about it, is that you're providing a better service. You're providing a fully transparent service where they can see everything. Well, based on the research I've done, and especially the amount of time that we've dedicated to understanding technology in our mortgage industry and where it currently is and where it's going, we do believe there's going to be a consolidation and a merging of 2 lanes into one in the future. I truly do believe that the point of contact with the client should be the real estate agent, and the agent with the digital solutions is capable of applying a better service, a digital, transparent, simple service for clients to be able to instantly access their their rates, their programs, to be able to instantly verify their assets and income, and especially credit, and get digital online pre-approvals that are real pre-approvals versus pre-qualification letters or approvals that are based on the human element, where there's a lot of mistakes that happen. So the industry on the mortgage side is changing quickly, and those additional services that are being applied through third-party integrations, third-party automations, third-party technology, bots, and artificial intelligence is really changing the way that the mortgage industry will operate for the future. So when we see the industry and what a hybrid agent could really apply for an all-in-one service where they're showing the client properties, they're instantly approving the client without it taking days to go to a bank and possibly weeks to get an approval back, it's happening within 10 to 15 minutes. And that's what we see as a future real estate professional, is that the hybrid will be able to capitalize on not only providing an easier, a simplistic service, but also generate more revenue. Because let's face it, the real estate industry is losing a lot when it comes to the overall margins that they're so used to making, the commissions that they're used to making. So things are getting tighter. Lead origination is getting more expensive. And even these lead vendors are starting to transition to become mortgage companies and real estate companies. I'm not going to say who, I think everybody already knows that, but more and more vendors are coming into the industry. They're making it more expensive to be able to purchase high quality leads because now they're competing against each other. And when that happens, if the lead cost on their end to originate the lead is going up, the lead cost on your end is going up. And when the lead cost goes up to the point that it no longer makes sense to acquire or purchase these leads from these vendors are realizing that and themselves are now starting to apply a different strategy to being a part of the industry themselves to again, provide that one-stop shop service. So I do believe there will be a huge consolidation, and the mortgage industry will probably have 10% of the mortgage loan originators that are currently available. But that 10% I do believe will be able to capitalize on 100% of the business, with the real estate industry being a part of it, and the real estate agents being the tip of the arrow when it comes to the origination aspect and the service aspect. So I know a lot of real estate agents are afraid that their position will be eliminated based on technology, but the best advice that I could give them, or the best scenario that I could give them, is if we go back 10 years from today and we take a look at some of the major credit card companies and banks that were applying artificial intelligence to how they even marketed themselves to clients. A lot of you probably remember Capital One would have a commercial that would say, call us anytime. Our AI bot, Amy, will pick up and answer all of your questions and direct you to the right department. Fast forward 10 years later, every single one of them has the same commercial, but now they say, call us anytime. We'll have a real person, Amy, pick up the phone and answer your questions on real time, which it's incredible to see because AI has changed so much. Technology has changed so much. Things have gotten so much faster and better, but consumer behavior has proven to these giants that are out there, especially these multi-billion-dollar firms that have the best tech, best systems, that clients don't want to use systems. And when you think about the high ticket item, especially based on the service a real estate agent provides and a mortgage loan originator provides, like, we're not there to open doors. We're there to provide certainty, because that's what a client is looking for, is this decision the right decision for me? It's not about how much can I buy or where can I buy? It's more of, should I buy? And that's an important service that AI is never going to be able to replace us as industry professionals. So that made me feel a lot more comfortable, especially when it comes to applying our strategy for the future and really understanding that technology will replace a lot of positions. But the mortgage loan originator and the real estate agent will be a part of this future real estate industry. And I'm excited about that. And I think everybody that is going to be a part of it should be as well too. But the truth is that not all of us are going to be here. So in the mortgage industry, 90% will be eliminated. The 10%, again, will be here to be able to capitalize on it. And I do believe the real estate industry is going to experience a pretty big consolidation where agents could do more because of technology and be able to make more as well too. So there's going to be less people in the industry making more. So that's how I see the future of the industry, especially for the next 5 to 10 years. But no, I have a good feeling about it. I think we're going to be okay. So some of the top questions agents ask is, of course, is this allowed? And the answer is yes. Can you represent a client on both sides of the transaction? Yes, unless the FHA program is the better option for the client. If the client is taking an FHA program, you're not allowed to represent them on the mortgage side, but you can represent them on the real estate side. Now, that doesn't mean you can't do FHA mortgages for clients that are looking to refinance or possibly purchase in a different location or a different state, but you cannot represent them on both sides only if it's an FHA program. All the other conventional, non-conventional programs, jumbo programs, you can represent them on both sides of the transaction and get compensated on both sides of the transaction. All of them, besides FHA, if they're representing the buyer. Construction, purchase, and refinance. So why aren't more agents doing this? Well, more and more agents are doing this. It's becoming a norm because I believe proof of concept is always the most important thing for people to be able to see it, to believe it. And the more and more agents that are seeing hybrids be successful and really offer a one-stop shop service, the more agents are signing up for it. Another reason a lot of real estate agents haven't even considered it is because they don't know about it. Most mortgage companies don't talk about this because they don't have the digital solutions to be able to be successful with the model and to be able to provide that layer of transparency a client needs. Most real estate companies don't want their real estate agents to be able to make more money doing something else besides what makes them money. So it's not a really smart business model for real estate companies to apply unless they become a mortgage company themselves, which they shouldn't because most of them don't know too much about the mortgage industry. Unless they buy a mortgage company, then it makes sense. But one of the biggest reasons is that it's extremely difficult to be successful in the mortgage industry if you have to do it based on the paper-based process, the old school manual-based process, because it's very time consuming. A normal loan officer goes through a lot to really close a loan. It could be anywhere from 8 to 12 hours per client, per transaction, just to get into processing. And depending on how many times I have to go back and forth with a list of documentations, explaining things to the clients, getting the pre-approvals and waiting for the contract to come in, there's a lot of work to be done based on the old school approach. But with technology, eliminating a lot of the minutia that goes into the file, the companies that do have systems to be able to simplify the LO experience, which is the hybrid experience, will be able to apply this on a level where real estate agents feel comfortable doing it because it is another part of their job. And some agents think about just doing more work on their end, doing more real estate transactions. But the agents that have really looked at the overall time they need to dedicate to close more real estate transactions compared to the time they need to dedicate to make more money on the mortgage side of the transaction, it's a 10-to-1 difference. So yeah, the best thing that I always recommend for everybody to do is you really just take a look at everything on black and white, do a demo, speak to somebody that's already a hybrid agent, hear it directly from them, versus someone that is going to sell you on it being good or bad. That has nothing to do with it. On my end, I've seen it. I've had my own wife sign up to be a hybrid agent. So I've seen the overall experience from the morning all the way to night, and even on the weekends, what a hybrid agent goes through and also what real estate agents go through. But no, the overall experience, especially on our end, based on the overall conversions of agents really applying this and the success rate of it has been incredible. So we're excited to share this with the industry, excited to really change the industry for the better and to be able to give agents the ability to be able to control their own destiny and have the ability to make more money on their end without doing more business. Because at the end of the day, like, I see what agents go through. They are literally the source of the business, and everyone comes to them for them to, of course, refer the business with their hands out. It's been a one-way street for a very long time. And yes, companies come in, they offer some type of co-marketing agreements, but compared to the revenue that you're generating for them, it doesn't even come close. And again, their margins are higher because of it. They're not offering all a great service. If they were, this program wouldn't be successful. And some of the agents out there tell me, hey, I got a great mortgage guy. I don't have to worry about anything. He does a great job. He offers my clients a great interest rate. That's fine. But is that mortgage loan officer a reciprocal partner? Because you're helping him grow his business. How is he helping you grow your business? Because the amount of business you sent him, that could be business and revenue that could be in your pocket. So that's the way we're looking at it. We do believe that the future is going to change. Outdated loan officers, and they're really not going to be a part of the future, and they shouldn't be because of their business model and how the lack of transparency and the high margin interest rates is really hurting clients. But most of these companies aren't implying this because number one, they don't want to. Number two, they can. And number three, it goes against their business model, of course, especially on the real estate side. So what are the biggest benefits to clients? I like this question. You probably heard me say transparency throughout this video multiple times, and you're probably going to hear me continue to say it. But transparency is one of the most important pieces to this, is being able to show clients exactly what they qualify for on black and white and let them pick and choose based on all the different options, which is great. It's simple. It's easier to be able to have that full digital transparency and solution versus having to go and get the information, manually enter, manually calculate it, and manually present it to the client for them to be able to see it. The time it takes is a huge benefit to clients because instead of a 4-day process to get a pre-approval, it takes 10 to 15 minutes to get a pre-approval. And it's all online and all digital. In regards to the time it takes a loan officer and a hybrid agent, that's the biggest difference as well too, is that the overall benefit is not only for the clients, but also the amount of time an agent dedicates to this, especially on the pre-approval side. We're talking about maybe 15, 20 minutes on average. And a worst case scenario, if it's a more complicated file based on the team that supports the hybrid, it could be about 30 minutes tops. So big difference. Another huge benefit is really the simplistic workflows and technology, where it makes it a lot easier for the client to be able to go through the application process without feeling overwhelmed. And it's because of how we've structured the overall questions and the overall stages of what is pre-populating and also calculating on the back end. So it's really simple to be able to complete an application and also to be able to go through the overall experience of the mortgage process. If you're in the industry long enough, you know how clients complain about how difficult the mortgage piece of the overall transaction is. And it's true because the human element is really involved and makes a lot of mistakes. So there's a saying in the mortgage industry, crap in is crap out, which means a really crappy application and a crappy loan officer that does a crappy job putting a package together will be a very crappy experience for the client when it comes to the processing, underwriting, and closing of the loan. So good loan officers that know how to package a deal and know how to ask the right questions and package it correctly for processing, their client experience is 10 times better and faster. But it's difficult to get good loan officers that know what they're doing, know what to ask for, know what they're looking for, especially when the files themselves are so different. So what we've done is really automate a lot of it, making sure that the system does a lot of the work. And the biggest piece to this is the automation on the back end underwriting. So in the mortgage industry, the underwriters underwrite like appraisers appraise properties. It's based on, a lot of it is based on opinion, but a lot of it is based on specifics in the location and area and exactly what is sold, comp, square footage size, same thing applies based on guidelines in the underwriting side. But the problem is that there's a lot of feel-good conditions and conditions based on how the underwriter was taught to underwrite and what they feel is higher risk. Is it credit? Is it income? Is it assets that they look at? So that human element, especially the human element of processing, makes it extremely complicated for the client to be able to have a consistent experience, and also the real estate agent and the mortgage loan originator to have a consistent experience. So what we've done is we've brought artificial intelligence right in the beginning stages of the underwriting, where a client and the loan officer and the team will know exactly what's needed on the file without any additional feel-good conditions or conditions that an underwriter just thinks that they need because of complicated scenarios and situations that they might not fully understand or feel comfortable with. So that's a huge piece to the overall experience, is that we simplify it, where we use artificial intelligence to underwrite, to scan, to clear conditions based on OCR technology, which of course will get a lot more into detail if anyone wants to learn more. But that's a big benefit to the client experience because we're closing loans within a 21-day period. Even on purchase transactions. Another big benefit is the overall cost. Because of how we are using technology versus being so dependent on having more people, because we have a different business model, which is a very lean and mean model, because we are using a lower margin strategy, the cost associated with doing the loan is cheaper. The borrower is getting a better, more competitive interest rate and also paying less in overall closing costs because of how we've structured the overall origination, and on top of that, submission, processing, and underwriting of a file.